All right, so let's take a quick look at Pfizer stock, ticker symbol PFE. So Pfizer is a pretty known company. They've been pretty stable. Um, they've got a dividend of 3.97%, which is it's an okay dividend. I like it. They've got a market cap of $213 billion, so there's definitely room to grow with them. And the way when choosing stocks, well, I choose stocks, is you always look at the market cap. So if they're, we'll say $40 and they've got a market cap of 215, you double that to 430, that's a $60 stock or $80 stock, sorry. And they earn pretty good money. They've got they've got a wide variety of drugs and services that they offer, and they're making kind of smart moves with the coronavirus vaccine because they're pretty much teaming up with another company, BioNTech, and they're agreeing to produce doses of vaccines, and essentially the government's giving them money early um, to secure the product. So the government will ensure the vaccine goes to the U.S. We have enough, and it's kind of the government's doing this for multiple companies. So Pfizer isn't the only one, but they're teaming up and they're trying to create a vaccine. So if they were to be able to create the vaccine, the stock would go insane. I don't think it will. It's a benefit, but they're diversified. So not only do they have a variety of drugs such as Advil, Celebrex, Lyrica, they've done chapstick, Viagra, a ton of known drugs that are very common in the US. They're trying to develop the vaccine, they've already secured money for it, and then they're actually creating they're actually going to create a drug for another company. So Gilead Sciences agreed that Pfizer is going to manufacture their remdesivir. I might be mispronouncing that, but essentially, this drug remdesivir is used to help treat coronavirus. It's not a cure. Their thought is it helps slow the spread. So that's kind of been used quite a bit. So Pfizer is jumping in. They're going to manufacture it for another company. They'll earn money. It's win-win. They're diversified. They've got solid drugs already that they've created. They're trying to do a coronavirus vaccine, and they're also manufacturing drugs for other companies. That's three solid incomes that they two definite, one potential, and they've earned money, so you could classify it as three. So they're diversified. Their PE ratio is 15. Generally, you want to have the PE ratio between 10 to 20. That's a solid PE ratio. That's healthy. Stocks like Amazon and Netflix that are just huge in the price, their PE ratios are insane. It's profits to earning. So essentially their stocks is 15 to their earnings, which is good. If it goes above that, I would expect the stock price to increase, which is beneficial, but there's debates to it on whether it's good or bad. But they're an established company. They're known. They sell good drugs. They offer a pretty decent dividend. So it's definitely a good dividend buy in my book. So check it out, do some research, have fun. This video is not financial advice. Any statements made are my views and is for entertainment purposes only and should not be taken as financial advice. Do your own research before making any financial investments.